Good afternoon, everybody, and welcome to today's edition of Live Market Analysis, USA style. My name is Capolingua. I'm the market analyst over here at ThinkMarkets Australia. It's a pleasure to be with you as we delve into the depths of the New York Stock Exchange and try and find some great stocks to add to your portfolio, or even there's value in figuring out ones we don't want to keep anymore. There's plenty of value in that. Before we get started, quickly on the agenda, it's Ask Me Anything. Put in the stocks into your Zoom platform, or if you're watching me on any of the streaming services there on LinkedIn, Facebook, Twitter, or YouTube, find the chat window there and let me know what you want me to talk about. I'll give you my best technical and fundamental reader. Let us head over to the charts first and foremost, just where I tend to live most of the time in these presentations, and having a look for some of your suggestions coming through here. And I had I've got a couple of, before I get to them, I had a couple of questions about some of the gold stocks in the US and how they're looking. So what I might do is a little bit instructive here, is show you how I can find some of those. What we've got here is just the Amy broker platform. It's just a standalone technical analysis platform. I know it says broker in the word, but there's nothing broker about it. It's just pure technical analysis, and it does have a programmable interface. I don't get paid by Amy Broker to tell you this. Go and find the technical analysis package that you want to use. It's just the one I like to use because I can program it. So I've got my long scan going over here. You heard me just tapping away. I've just adjusted some parameters there. And what it's going to do is search for short-term and long-term uptrends based upon my trend ribbons, which you know about if you've been here before, which we'll talk about if you haven't, and then making sure that at least the last candle is a white candle. That's very important, but it's actually very simple apart from that. And in terms of those trend ribbons, we're not necessarily even looking for uptrends in those ribbons. We're just making sure that we don't have a downtrend in those ribbons. Think about that logic for a second. And really the purpose of a scan like this is to look through the charts faster than I can look through the charts. That's all it is. So you can make it really strict. You can make it really loose in terms of letting stuff in. And I like to make it a little bit more on the loose side. I don't have all the time in the world, but I've got plenty of time to look at my charts. I make a time each day where I do that. And in that time, I prefer to have more stocks on the list to look at than less, because I don't want to miss anything. Okay, so I don't want to make the scans so restrictive that they don't throw anything up. And what I'm doing here, you can't see it. I'm trying to just find just the gold and the silver sectors that we're going to look at here. So I'm looking by the GICS designation. GICS is the general industry classification. And I can actually select just gold and silver stocks. So straight away, we've eliminated all the terrible banking stocks out there. And I'll run this scan now, and you'll see it start to scan through. Didn't get a huge list, and because I do have ASX shares as well, and this we're going to see probably some Aussie ones in there coming up as well, but we will persevere. I think what we noticed there straight away is it's not a huge list. Actually, we think gold is doing so well at the moment, gold and silver, but it's actually a very small list. And let us save that list. So I can right click. You can't see any of my right click windows, but I'm going to add these results to a watch list, and I'm going to put them in there in store one. Head over to store one, and now they're here, and I can look at the charts individually. So a little bit of a bonus here, I guess. If you do trade Aussie shares, you might well see the odd Aussie one pop up. But having said that, that's based upon the 4th of May. Of course, we're now trading 5th of May. Okay, long story short, this is the one I like the most. Just coincidence, it happens to be top of the list alphabetically, but Agnico Eagle Mines. It's about a $30 billion US gold producer. Now, to put it in perspective, Newmont is the biggest. That's about $40 billion. So this is a major company here. It's bigger than our own Newcrest Mining. And they're all fundamentals. We'll look at the company valuation in a second, but I do like this chart here. So we can see it's more of a turnaround play, obviously, than a bottom right, but bottom left, top right, but it's starting to get some of that feel about it. So we can see here, obviously, starting with the trends, that short-term trend is nicely set to the upside there. And the long-term trend is also flicking back up to the upside. We can see, importantly for me, then looking at sort of support and resistance levels, or supply and demand levels, as I prefer to call them. We can see it's dealt with that area of supply through here. So here's our, I'm going to call this a major point of supply. It clearly is in terms of its importance. And then we sort of test into that, test here. We pull back a little bit, but held. Notice where the wouldn't call it a failure at the point of supply, but the pullback from the point of supply terminated here at our light green zone. Okay, that all important light green zone, the light green zone that we're looking at for key candlestick patterns. Now, I don't mind if the price action's a little bit wonky at a major point of supply, because we should expect that compression to occur. So I won't draw the peaks and troughs in, but you can see prior to getting this white candle here, which is a very important one, and then the super important white candle here, the price action might well not have been higher peaks and high troughs. It was more compression. So but that's okay because of this MPOS. And this candle here is really sort of your indication there. That's your plus 1/3. If you're that way inclined, so that's where, based upon my model, you would be looking to buy, and then really I can't see any reason why you wouldn't be doing the same today. There's a little bit of an upper shadow there. That's disappointing, but we know the spot gold price. Just pausing a little there because we might have a little interruption with the internet. I think it's come back online. And as I was saying, we had a bit of a pullback in the gold price towards the end of the session. That's probably explaining some of that little upper shadow. But otherwise, no complaints here. As you would expect, the next point of supply is up here, and you do need to make, or be comfortable that you can make the trade work in there. So from a reward to risk perspective, it's getting a little bit tight. Okay, so if we're entering around here and we are setting a stop, the stop needs to go at least 0.5% beneath that low. You can see we're only just sort of making 1-to-1. And put that in perspective, because we're going to look at so many charts over the next hour where you might have set up as good as this in terms of your price action, your trends, your supply demand zones, your price action and your candles, but you might find that there's a better reward to risk. But the topic at the moment is gold, and that is the one I like. Very quickly now down the list, because told you the one I like the best. It's not that I don't like this one, but look at that last candle. You can see that big upper shadow. Everything else checks out on this. It's probably even checking out even better than the last one because we don't have that overhead resistance, but I can't buy that last shadow there up the top. So if you had it, would you take profits on this? What, $30 with that shadow? I think you actually would take a little bit off the table there and wait and see to maybe buy that back a little bit cheaper. And going through the list, B2Gold Corp, I think it's fine. I could go hold. It's not a buy. That one there, and we can see how the scan is working. All this is saying it's not an uptrend, is it? We're not seeing double green, but it's not double red either, and that's why that one's been allowed in. Fantastic. Could I buy that one? I could, but it's just a long way away from my light green zone. Where was the best place to buy it? Well, I know it wasn't here on that day. Unfortunately, we don't run these every day of the week. I wish I could, but I just don't have the time. Maybe you want me to send ThinkMarkets an email because we would have found that. That would be your best point to get in. That one's fine, no complaints. Last night's shadow wasn't terrible, but I think we are within range of that. So probably no, and there's a little bit of a bonus there. EVN. Looking pretty good in the Australian market. That's a pass, no big deal there. That one's not terrible. Franco-Nevada, another big gold copper company there, but just in the shadow of that major point of supply. That's a bit ho-hum. That is probably too far away from the light green zone. I don't mind Barrick Gold, actually. I think that's looking half decent. Maybe that last shadow there is a little bit of an issue, but I would say pop in another little white candle with a long lower shadow, or even just a white candle, full white candle, and actually you can add some risk on that one. So that's probably my second favourite you could actually go on. I know there's Gold Road there from Australia, still looking very good. Hecla Mining is a silver company, not looking as good, and look at that, amazing. Harmony Gold, too big a shadow. I was going to say some of the moves in the stocks haven't been as good as the moves in the underlying commodities, unfortunately. Fine, no problem. Too much of an upper shadow, too much of an upper shadow. And just giving you an idea of how I get through a list. Now, this one looks pretty interesting. This is Newmont. This is the biggest one of them all. I wouldn't say it's a screaming buy, but I do think it's starting to turn the corner, and maybe you can move into 55. I don't think I'm could be bothered on that one. That's Pan American Silver. We do often talk about that one in this session. Looking as a hold, as we saw it last time, PRU, no big deal. RGLD, too much of an upshadow. Resolute looks fine in Australia. Happy to own that one or add risk as well. We're getting into too far away from the light green zone, waiting for pullbacks. No big deal. Interesting. Ordinarily, I could actually just add risk on a candle like that, but probably not in the shadow of that point of supply. And this one, certainly a hold. In fact, I think last time we looked at this last week, we actually even said add some risk. So that one's got a big silver exposure there as well. Definitely a holder on that one. Disappointing shadow there, but still a happy holder. So a little bit of an insight into how you can use technology to scan through a big list, narrow it down to a small list, and then do that manual work as well of isolating just the ones you want to look at. Okay, back to your requests here, and it's just a coincidence, maybe not a coincidence from Paul's side of things, but a coincidence from what I wanted to talk about at the start here is the GDX ETF, which has come up here. So if it's a good point I think Paul's also making, is that if you can't decide which gold/silver stock to buy, then this is another option. So you can just get a bit of everything in that one purchase here as well. And you can see there, in fact, last week we said plus 1/3 on that one. So happy holder if you did get in, no complaints on that. And you can see that last candle is probably a bit of a mix, isn't it, between some of those big upper shadows we saw and some of the ones which still closed pretty close to their highs, but no issues there. Would I buy that one based upon that last candle? Probably not. I just think there's enough of an upper shadow there just to keep me out. Again, in the interest of finding the best of the best of the best today, I'm not sure if that one will be it, but hey, we need to get to the end of the hour. But certainly a happy holder there. Okay, this one's coming in from David. We're going from gold to green brick here, GRBK. Wow. I don't know what these guys do. I'm guessing they're not a gold miner, and I'm guessing they're not a regional bank in the US, because those charts are the exact opposite of this. I can actually, I know it's a long way from the green zone, but I think you are completely ignoring the market if you don't just slap just a little bit of risk on this one tonight. Okay, now the only caveat would be if it gaps up too much. I don't want to see it sort of gap up too much on the open, because if it sort of pulls back from the gap, you can buy the pullback on the gap. But look, if it opens there or thereabouts, and that close there is 45.76, so if it opens below, say, let's add 1% to that, in that range, then I think you could certainly add a third. Why wouldn't I go in and just put all my money on this one, or a full-size position on this? Because it is so far from the light green zone. And we know we do prefer to buy things that are in nice, look at this, beautiful, what a wonderful chart this is. I know we can't go back in time. I wish we could in these sessions, but we have had a really good long-term trend and plenty of opportunities in our short-term trend here, where the ribbon is supporting price. It's that cushion, isn't it? It's like a little cloud supporting the price here. And when you get back to that, and particularly that candle there, the big white candles at that, or the candles with the lower shadows, is where you're looking to add a little risk. And don't stress out too much about things, because you can see there's an ebb and flow, there's a pullback here. And, even after this little bit of pullback, we terminate here, we come back adding a little bit more risk and a little bit more risk and a little bit more risk, until you get a great day like this. And there's no reason to sell it, is there? You're still adding risk, and you're rewarding those stocks that are doing the right thing by you. So I think that one looks very good. What I did forget to do, and let's head over now, and we'll sort of double here. So we're going to look at AEM on our Thomson Reuters Refinitiv Icon spreadsheet. And just while I'm doing something I should have remembered to do before the start, which is change the currency over, because it's set by default to Australian stocks. Now we're in US currency, and we're going to go to US stock. This spreadsheet takes, or Refinitiv Icon is the product. Thomson Reuters is the information gatherer of financial information, and they go and survey any broker really they can get their hands on, and ask them what they think about AEM and many other companies. And you can see we've got 17 brokers contributing their estimates to the spreadsheet. And they will give us data, or each of those 17 will give us their revenue estimate for 2023, and then for 24 and 25 and 26, and each of these other key parameters. And Thomson Reuters will then aggregate those into an average, and we call that consensus. So if you hear in the media people talking about consensus data, this is the consensus data. This is it. And what a great platform and a tool we have here available to us. We also get the historical data, so I can put the history together with the future to get some trends. Very important, I make that cell match this cell here, so everything works. And we can, let's start with the consensus. So we've got 17 estimates there. Average price target is 66.61, which allows about 10% upside from the last price. We've got five strong buys. That's good. 12 buys, one hold. Importantly, no sells and strong sells. And I do like to see that, because it gives me a little bit of peace of mind that, don't forget, these 17 brokers are the biggest in the business. Your Goldman Sachs, your BOFAs, Cities, UBS, Deutsche Bank. I mean, you name it, they are the biggest in the business, and they have the smartest analysts working for them on analysing these companies. So when all 17 unanimously said, I can't find a reason to sell this stock, I think that's positive. Okay, there's so much data on this spreadsheet, and if you wanted to, you could look at it all. I'm not going to. I'm just going to look at that EPS line for now, because at the end of the day, this is what comes back to shareholders. Okay, this is your return. And I want to see bottom left, top right in that to tell me that even through, for example, a pandemic, global supply chain shortages, and rapidly rising costs in both supply chain costs and also interest rates, that the company is doing well, and it is. Look at that. I'm actually really surprised for a mining company to have such consistent earnings through different parts of the cycle represented in those 5 years is super, super impressive. But we need to see that growth going forward, and unfortunately we're not. We're seeing a bit of a tail off here. A couple of reasons for that. Maybe the brokers are predicting lower gold prices down the track, or other commodity prices, or maybe we're having some production issues there, and I don't know what they are, because I can't see that in here. For me, it's less important what those issues are. I have comfort, I have peace of mind in the knowledge and the belief, and I do believe that those 17 brokers worked all that stuff out. They went and dug into every aspect of this company, and I believe them when they say that earnings are going to decline. I don't need to know why. I just need to know that those 17 brokers think that, and I'm happy with that. That's my style of fundamental analysis. I don't need to go do the work, because I could do the work, and I guarantee I'm not going to be as clever as those 17 major brokers anyway. So I believe them. I honestly do. And they're saying we've got a compound annual growth rate, or a negative growth rate in this case, of -3% for the next 3 years. Not ideal, because if I just bought the market average company, or just bought the market ETF, for example, that's going to give me, within it, earnings growth of around 8% in your pretty typical year. And, you're going to have a PE in the US for around about 15 or 16. So I'm getting much lower than the market growth, and I'm paying way more for that. And when this occurs, my spreadsheet goes, I'm not so sure about this one. And therefore it will mark it down. You can see that my fair valuation target is significantly lower than the current price, and also significantly lower than the broker's price there. And when I come here, I look for red flags. And look, the other thing I need to do is make sure this is a reasonable number. This target PE is so important. How does it fare against the previous 5 years? Where is it in that range? It's definitely towards the bottom of the range, but not at the bottom. So I would say that you could even go lower, which would only make the valuation worse. Okay, there's nothing there to suggest that this isn't the wrong number. So that valuation is somewhat concerning when I go back and then look at the chart and say, well, the chart looks good. But that's not what these sessions are about. It's not where I'm supposed to go. That's where I'm supposed to go. These sessions are about giving you a bunch of information, but also a whole lot of education on how to use the tools. Does it tell us not to buy AEM? For me, no, I'm still going to trust the chart. That's the way I work. Okay, I know I went back there, but I forgot to do that last one, which was the green brick, wasn't it? The GRBK. How many brokers do we have covering this company? Just 2. Hey, I've never heard of it. So, it's no surprise. Probably not that wide, the coverage. And when you only have a couple of brokers, you do need to take some of these numbers with a pinch of salt. You can see we've only got estimates out to 2024 as well. We don't go all the way out. So that's a little bit concerning. But for the brokers we do have, in fact, they're not even that positive. We're over priced now, probably because of that huge move up, but about 4% overvalued. And even then, they're not that positive here. So whilst we've only got 2 estimates, somehow we've got 4 ratings. Very well done there. Thomson Reuters, don't shoot the messenger here. These are their numbers, not mine. 1 buy, 3 holds, no sells, no strong sells. EPS line is good though. In fact, very good. I mean, look at this growth through here. It's amazing. 372 to 602. You know, it's incredible. But then we hit 2023 and we're coming down the wrong way. So not sure what's happening there. And if I do match, that is matching up. The 14% is coming from the fact that this dip, we get a bit of a rise there. I'm not going to do too much more on this simply because there's not a lot of data here to go on. But if we stick with the fact that the current PE is really low compared to, you know, some of the historical PEs there, but above a couple of the last one, it might look a bit cheap. It might. This growth versus that PE. It's going to look cheap. And my spreadsheet is going to say, look, you're getting way better than market growth and way less than the market PE. So I have to say that it is cheap. So for whatever it's worth, I respect the brokers are there, but maybe some profit upgrades are coming as well. Maybe they're going to upgrade those targets. My spreadsheet saying very, very cheap there on green Brick Partners. Let us keep moving. We're going to head over to PLSE for Perry. Oh, it looks great. Did we talk about this one last week? I can't remember, but yeah, it looks good. The only problem is the last candle there, just that upper shadow is prohibiting me from running out and buying it tonight. But there's plenty to like about it. If you're in it, then I 100% would suggest you hold on to it. There's nothing so sinister in that. Oh, good one. Thank you. That's why I knew why. That's why I get you to come to these things. There it is. PLSE looks great, but that last candle is a problem, isn't it? It's not going to cause us to rush in and buy it tonight. Let's just see. Give it a few more candles. It might, because it's showing us there's some supply in the market. Supply came in last night. Let's see how that supply plays out now. Okay. It might be a couple more candles. And let me just draw. Because again, I wish I was around every day. I'm not. You might see something that looks like this. And in the green box, which magically appears on the screen after I say it, get the right candles in there. Could be interesting. Well, okay. Let us, at the risk of not changing the screen, so we can head over. We're curious. It's something we could buy. So let's just have a quick look in here. PLSE. I don't think we're going to get much coverage. In fact, we didn't get any. Is everything just slowly disappearing there? No coverage. Well, it seems to be some coverage because there's one rating in there, but it's pretty scant, isn't it? Okay, let's go to the next one, which is Comcast, CMCA. So I'm going to head back here. CMCSA, to be exact. I like this. I think you can buy it soon. We're just waiting on one thing, and that's the right candle. And we know, I'm just going to quickly scoot over here. Let's just check, because I can see 4 black candles there, right? So I want to check, and I can actually do it a different way. But you can see here the last 4 candles on the NASDAQ have not been great. And if you're saying, well, compare it to the S&P 500, you can see there as well. Okay, so let's head back to CMCSA and say that even though it's been pulling back, it's still beating the market, and those last black candles are probably a function of the terrible market, not the terrible Comcast. Okay, so what I do like about this is the fact that we've broken through here, okay, that point of supply, and these are super impressive. So that candle there and that candle there are super impressive. And when I see candles like that, I'm compelled to buy. It's just about finding the right time to do it. And we're not at the right time yet. So this is where, as you know, I like to draw 2 particular candles for you. And that one is going to change in a second to look like this. Okay. And the other bit of that candle needs to come down there. So if we see, let's change that to black. if we see that candle come in, could be tonight, could be the next night, and or, so it doesn't really matter so much which one you get, its best buddy, which is this one here, okay, then that's when I would happily add 1/3 on the basis that, oh, damn it, on the basis that the next leg up in this uptrend, I do believe, has begun, as evidenced by those two huge demand side candles. Okay, so I was going here, and I was going to go, if you see either of those, then go plus 1/3. But until then, you can be very, very patient because of those 4 black candles. What else do I like about it? Well, we can see, obviously the short-term trend is up, the long-term trend is turning up, not up yet, but turning up. And, you know, even a candle like that one the latter showed, it could confirm for us that it is going from this pesky area of supply to really confirming. That's all we need to do here, confirm that it's going to an area of demand. And then when I zoom out, I can't see a whole lot in the way. These are a little bit of an issue, okay? But I'm happy to give it the benefit of the doubt on really nice candles. But let's very quickly head over here and see what CMCSA looks like on the spreadsheet. 28 brokers. Wow, that's a lot of coverage. Okay, I mean, it's a big company. And we can see that when it's a big company, what's $167 billion US company. I mean, that's just incredible. It's like a BHP size company. So we are looking at an average target price here of $44.90, which does allow 11% upside. A little bit of a mixed bag though on the ratings: 5 strong buys, 16 buys, 11 holds, 1 sell, 1 strong sell. So that's interesting. EPS line 255, 313, 261. This dip, why did it dip there? COVID. So I can forgive that one, and then we get back to growth, and the growth going forward is actually pretty good. In fact, it's 11%, so that's much better than the market average. And the great thing is we're getting it cheaper than the market PE, so you know my spreadsheet's going to like it. That 9.5, how does it fare against the 5-year historical range? It's actually below that range, so we're holding it to an even higher account. It's an even higher hurdle rate. Remember, lower PEs are more punitive, or lower PE targets more punitive on the valuation. So the fact that we are lower even in the 5-year range, I think, is very impressive. So I'm very confident. It gives me great confidence, I think, in saying that I think there's at least 7% upside in that valuation. So there's nothing in this valuation to suggest that we cannot follow the chart. Okay. All right, next one on the list is Netflix. Good old NFLX. I'm certainly a customer here, but not an investor. There's not much going on here, as you can tell from that pause. I could keep pausing. I could pause for the rest of the hour because there's nothing happening at Netflix. There's no reason to buy this. If you've got it, maybe you've got it. You say, hey, Carl, what do I do with it? There's got to be some better stuff out there than this, doesn't there? I'm going to stop short of a sell and call it a hold, but even, you know, the grip on that is quite tenuous. And then I say here, that low there, which is 316. Look, it's closing sort of 315 or worse. Then it's on a bit of a slippery slope, isn't it? Through here, like through there, it's not looking great, and then through there, it's looking really bad. Buy, hold, sell on that, squeaking it at a hold, but much closer to a sell than I am for a buy. No point looking at the Netflix company valuation because I'm not interested in buying it. That's how my methodology works. Find a great chart, and then in brackets, I don't do this, confirm the valuation. But some people, they feel they need to have that fundamental basis to their investment. Me, I don't care. I'm 100% technicals. But hey, horses for courses, and whatever curls your toes, I think is the saying. MSGS. There it is. Madison Square Gardens. Sports Corp. What a ripper chart. How good's this? I know we're in the middle of playoffs at the moment, NBA playoffs. Is that somebody still in? I know my son would know. He's 11 and he's obsessed with the NBA. I should know this because I'm sure he's told me about it. That's great. There's nothing here to suggest that I shouldn't just run out and just buy it. I mean, that's where I'm at. This is a compulsory buy. Remember I said Select Harvest was a compulsory buy. I said that in my head. But this is one of those where you just go, yep, there's absolutely no reason why you wouldn't just put some risk on this. And it does put into perspective, I guess, some of those ones where we weren't so sure, I'll throw some risk at this. No problems at all. Now, I don't think I need to say any more about that, do I? I think I'd just be a broken record with talking about trends and price action and candles and stuff. But let's head over here. Who asked that question there? That was Perry. I think Perry knows why I think it's a good chart. Let us go to MSGS. MSGS. Not that much coverage. 4. I'm a little bit surprised. So little coverage. And they're not all that positive on it. I mean, average target 203.75, saying it's a little bit overvalued here, according to the brokers. But 2 strong buys, 2 buys, 2 holds. Again, 6 ratings for 4 estimates. A bit weird. To be fair, maybe some brokers only give their rating and they don't give a price target. That's probably it. Earnings per share line, 594, 48. Bit weird. I get this. I get you've got, and I'm assuming something to do with the venue. You've got a big venue that can't get used really for this year and much of this year. And then we're bouncing back to growth and we're back to normal for, if I match this with this, and I know for US viewers, this is probably not the case, but there is a glitch from Thomson Reuters, not from me, but I know that if I do match that up, and I have double checked that the numbers are correct. EPS is 6%, it's a little bit below your typical market, but not terrible. The problem might be the fact you're paying an astronomical PE here, but that's probably more to do with the fact that we had some issues through COVID and kind of bouncing back. But it's exy. It's exy in terms of an absolute PE, but not exy in terms of what the brokers are going for here, right? So my price target is not all that different. Let's face it, it's not all that different from what the brokers are saying, but allowing a little bit more upside. I don't think there are any red flags in there, apart from the fact that the PEs are a little bit lofty. But I can get past it based upon that incredibly good looking chart. Let us head now. Thank you, David, for coming along and giving me your questions. David was thanking me for my analysis. NSIT. Normally I come to these and I think we're going to get Microsoft and Tesla and Amazon, but it's a testament to you lot that turn up each week and give me some of these really interesting charts. And it tells me that you're going out there and you're doing that work and searching yourself. Hanelli, I don't mind this one. It's at that dark green zone, isn't it? I mean, it's there, and we know that dark green zone should support price, and it is supporting price. It was a great trend before. Why can't it continue to be a great trend afterwards? Oh, would I add a third? Are those last 2 candles, and they're not terrible candles, and they're actually quite good candles within the context of the fact that the rest of the market has been pretty terrible these 2 days. This is disturbing, but this is good. It's come back. It hasn't quite. Look, I think for me, I want to see it close. This is where the supply came in, right? So if we focus on this candle and listen to the market, and this is what technical analysis is about. Technical, it's all mumbo jumbo, driving a car, looking in the rearview mirror, analyzing the bones of the tea leaves. That's what I hear from the most ardent fundamentalists, hardcore fundamentalists. But, that candle is so descriptive. It's just telling you, it's talking to you, saying, hey, at that point, the top of that candle, there was a bunch of supply that came into the market. Who knows? I don't know why. Who cares? It's there. And for all intents and purposes, when you look at this move here, right, and then that candle, you should get a continuation. So what it can do is it can draw a bunch of short traders into the market looking for shorts, but then we don't go down. Even in 2 bad days on the market, we don't go down. So there is demand in the system, we know, and we're at a little bit of a tipping point here, isn't it? Who's in control? Is supply in control? Is supply in control from here? or is demand in control from here? And if you can answer that question, well, you're Nostradamus, right? But what I can say is a couple of things could happen. This can give us the answer, okay? And this is what good technical analysis is about. It's not about making predictions. It's not about saying, oh, that's got to go up. It's about saying, well, if these things occur, we are getting signals from the market that one outcome has a higher probability than the other. And I'm going to put to you that if we can close above the top of that candle, which is where that supply really started to bite into this fledgling rally, this idea that we have hit that long-term value zone. If we can close above that, we've gotten rid of that supply. That supply is out of the market, and that's a good thing if you want to go long. But if we close beneath this low here, well, it means the opposite. It means that the demand is out of the market. The demand that has similarly been working away to try and turn prices up. This demand started down here. It's gone. I mean, if we close beneath this price, that demand is gone. It's not in the market anymore, and that's disturbing if you wanted to go long. So let me change the color of this arrow and make it green for up and red for down. But let's wait for a close above that high. And that high, if you're not sure, there is 125.72. Okay, so close above there or better, and I'd be looking to add a third, but only a third on this case, and it's very important. Now, if you went back to the other one there, which was Madison MSGS, and if you said, Carl, stuff 1/3, mate, this one looks awesome, I'm going to add 2/3 or a full position. I don't mind that thinking. It's not my model, but I don't mind that thinking, right, on that one. But even if we get that close above 125.72 on this one, which is NSIT, I would still only be going for a third. And the reason for that is because it is more of that turnaround play, because we have seen evidence. If you're not sure what the evidence is of supply, by the way, there's your evidence of supply. I mean, okay, so I'm going to be a little bit more cautious on my risk management, okay? And it's because of this. It's because we know if she's going to play, she's not playing for me. That I prefer to dip the toe in the water on those ones, because sometimes we don't know what is lurking under the surface. And if I'm going to lose a bit of my anatomy, I would much rather just lose my tippy toes. Okay, nothing more than that. All right, let's head over. I won't do the fundamentals on that because we're waiting for a bit of a close there, a contingency. And I know for some people who sit through, they suffer. I know you suffer so much, don't you, through my sessions. I apologise in advance for all that. You're probably never going to be interested in buying NSIT. I don't even know what the name was. But hey, hopefully there's some value in doing the analysis, all right, and learning a little bit more about how to use technicals to improve your outcomes each time we catch up. Here's the big one, Microsoft. I was wondering when this one was going to pop up. Hey, look at that. Now, they are the most amazing last four candles there. And ordinarily, you would brush past this and you go, oh, well, nothing to see here, all very boring. But I love those last four candles because I know how bad the broader market has been. I know the uncertainty that is gripping particularly US markets at the moment with their regional banking crisis. If you're not aware of the regional banking crisis at the moment, there's a bit of a regional banking crisis going on, right? Where there are some of these banks are dropping, 10, 20% in a night. Some of them are down 60, 70, 80%. Some of the ones that have gone under are down 100% from their highs. But some of the you-know-what is hitting the fan, and that fan is on working on ultra-high speed and blowing the you-know-what everywhere. But that you-know-what, to continue with this analogy, does not seem to be impacting MSFT all that much. I mean, I actually think that's a really strong showing in those last four candles. And I'm a happy holder here. I don't think there's anything in there to suggest that you shouldn't be. I know we've been buying this for a couple of months now, more than a few weeks. So I don't think you need to sell any there. So a happy holder. Would I buy it? No, there's no reason to buy it because those four candles are black and not white. So, but happy holder there for you, Jay. Jay, what's your first name, Jay? I know you're always popping up. I'm sure it's not just the letter J, but let me know there so I can call you by your first name. Because the other single initial person, H, Haraju, is up next with SMCI. Let's check that one out. Oh, look at that. Looks good. I mean, you would have, bought some yesterday. I know, again, it's just 1/3 because it's a long way away from the green zone. I don't know if I'd chase it today just on the basis of the candle, might indicate we need to digest a little bit of what's going on there. As in, a couple of candles just to work through the take profits that's gone up crowd. Okay, and they're always around. You've done it before. You've been part of that crowd. Oh, it's gone up. I need to take profits. They're there. There's plenty of demand in the system. We know that. How do you know there's plenty of demand in the system? Look at the chart, everyone. So that demand needs to work through that short-term supply, and then it can go. So one, you definitely want to keep an eye on. That candle's not good enough to get me in it tonight. But yeah, look, there's the makings of a very good chart there. And if I zoom out, you can see even more reason why you should keep an eye on it. I'm pretty close to the bottom of the list here. NSFT. We'll get to the streamers. Sorry, streamers, I've been neglecting you. NSFT. Let me try and find that for you. And sometimes. Hanelli, NSFT. Just double check that one for me. NSFT. It's not popping up. Doesn't mean it doesn't exist. Might just mean that I'm not finding it here, or it could be an over-the-counter company as well, over-the-counter traded, and I don't have data for those here, but I can find them elsewhere. So just confirm that one for me, Hanelli. AVGO. It's just popped in from David. Thanks, David. Not great, unfortunately. It's just starting to slip a little bit, isn't it? And yeah, there is. I'm just looking back. My eyes just going back to this, where I can see we're probably still in that funk, for want of a better phrase, where we're just sort of dealing with that, and then that's not that far away. I can't see a reason to buy it. I wouldn't be going short either. It's not like it's in a horrible downtrend. So there's no reason to buy it. I've got to hold it, and that group's becoming a little bit tenuous. Yeah, look, hold, but it's very close. I mean, a close below 600 is not looking great, and certainly a close beneath that low there, 572 is starting to look pretty awful. So not really, I think, a highly prospective candidate just at this stage. This one's from Troy on the LinkedIn. Thanks, Troy. Thanks for joining me on LinkedIn. And Troy's asking, hi, Carl, could you please provide some insight on what you think a fair value price would be for the Better Shares NDQ ETF? Well, that's tough to provide a fair value on an ETF. And I'm pretty sure we can't even go into Thomson Reuters and find a fair value on it. NDQ Better Shares NDQ. I might need the code on that one, because it might not be exactly NDQ. I'm just curious. That's the NASDAQ company, not the NASDAQ exchange. That's the company that runs the exchange. It just saw it pop up there, caught my eye. So Troy, give me the ticker code on that one, and I'll be able to do some analysis, at least on the chart for you. Google from Jay. Jay still withholding their name. Oh, Jill. Thanks, Jill. Good. Okay. Jill's probably a bit frustrated with me calling her Jay. Thanks, Jill. Okay, we are going to go to, my brain went blank, Google. Is Google, look, it's much like Microsoft. I think it's faring up pretty well. You can see we've been looking to buy this one over the last few weeks. So we're going to put our spectacles on and say, well, from the point of view of if you had it, what would you do with it? I think we're still holding on, Jill. I don't think we need to panic just yet. We haven't got the market we wanted, have we? I think we've picked some nice charts, but we haven't got the market we wanted. I think you would probably minus 1/3 beneath that low. That low there, 102.63. And I would wait for a close. I wouldn't just let it tickle. I'd wait for a close beneath that before I acted. And then the next third, and that notwithstanding price action that would give you earlier signals, would be on a close beneath that low there. It's 99.74 and 99.74. So look, hold it for now. There's nothing so sinister in that to suggest that we need to sell immediately. I think Google's holding up pretty well. It's a bit like Microsoft and showing a little bit of its quality there as well. You need the rest of the market to pick up. And if the rest of the market doesn't pick up, in fact, the opposite occurs, the rest of the market sells off, nothing's going to be spared, let's face it. I mean, even some of the best charts we've seen today will more than likely come down. And you have to be aware, if you're adding risk into a market that isn't looking good, go and look at the index, then, think about that also, whether that's such a wise thing to do. NDQ is the ticker on the ASX, says Troy. Okay, well, we do the ASX ones on on Tuesday, and we do the indices on Thursday. But hey, Troy, I mean, your NDQ is going to look pretty much like what the NASDAQ's doing. And I did talk about that in yesterday's session, but I'm happy to talk about it today because it's relevant. I think it's okay. I don't think it's great. I think much like Google, much like Microsoft, you can see some of those big caps still holding up pretty well. And, you know, there is a pull on it from the banking sector. I won't show you that chart again. And I would say, if not for that pesky banking sector, this would be 1,000 points higher right now. In fact, I'm quite certain the S&P 500 would be, you know, a few hundred points higher. That banking sector issue continues. It's like a festering sore. It's annoying. At the moment, the festering sore, it's not causing the market to, we've got a little bit of a limp, you know. It's not a broken, you know, we haven't broken a limb yet, for example, but who knows what that festering sore is going to turn out to be. Okay, and that is a problem. It just nags away at everything we talk about in these sessions, doesn't it? Microsoft MSFT had nearly made a mistake on NSFT, but yeah, that's okay. We've done Microsoft. That's good. ANET, also from Hanelli. ANET. Arista Networks. Hanelli, what are you looking at here? I'd love to know. I'd love to pick your brain. Are you looking for those pullbacks into the dark green zone with a nice white candle? And that's what it is. I mean, you can be two that have done that. It's like, maybe that's what you're going for. I don't mind those sorts of setups. I just think this one's a little bit too early. Remember, we expect there to be demand in and around these zones, but it's not always perfect, right? And yes, I mean, it's there. So let us wait for confirmation. I think each of these times, if you just waited for a little bit of confirmation in that zone, and that confirmation is going to be price action. It's got to come from this. It's got to come from setting a higher trough in and around the zone and then taking out the little middle peak. By definition, think about this. If you've got a higher trough, right? So let's stop calling them troughs. Let's call them points of demand, because that's what they are, right? So if you've got two higher points of demand, by definition, in between those 2 points of demand, you must have a point of supply, okay? If you go to Switzerland, right, and there are two valleys, 100%, ladies and gentlemen, between those two valleys, there's a mountain, okay? And what we need to do, I think, before we get too much more excited about this one, is to see it close above whatever that point of supply is going to be. And, you know, we're looking into the future now. So I can't buy it on one candle just because it's in that zone. I want to see the price action turn around. And then I can entertain adding some risk to that one on a bit of a pullback play. Let us head to JBSS. And Hugo's got one I'll do next, which looks great. And there are plenty of opportunities to buy this one. But I don't think you want to just chase it just yet. I'm a little concerned that there's just a bit of supply in the market here. It's a bit pesky, and it's only pesky at this stage because demand is still very, very strong. If you've got it, hold it, no doubt about it. And maybe you do have it because there's just so many. Oh my gosh, you want a compulsory buy, anyone? Compulsory buy. I mean, compulsory buy right there and there. I mean, it just, and even here before that big run up. Okay, but it's a long ways from the light green zone, and the candles aren't allowing us to buy it just yet. But hey, if you've got it, there's nothing in there to tell me to sell it. This one sounds familiar. I'm sure we've looked at this one in the recent past. Okay, let us have a look. Make sure I've got everybody's Google and Amazon. We haven't done Amazon yet, so let's do that one. AMZN. I'm pretty sure we've said words to the effect of not ready yet on this. And I know it's a big company, and I know many people interested in it, and they want to know when it's ready because they want to add it to a long-term portfolio. I still don't think it's ready, and there's really nothing in the market to suggest it's any more ready than it was last time. And I'm a little bit concerned that we are still having some problems here with this long-term trend zone impeding upward price action. And until we get this over here, I think you just need to wait. And I'm guessing my analysis is very similar to what I said last time, because if I drew that, I would have been saying, hey, you need to see this before we get too excited. So look, nothing's changed on that one. Let's keep moving. I've got this one here, PLPC. That one's coming from Hugo on the YouTube. Thanks for watching, Hugo. And that's a monster, isn't it? And once again, a few compulsory type buys back through here, wasn't it? And a great example of why you shouldn't fear these big moves up. Okay, look at that. Look at that one there. And again, so many people would look at that and say, well, I've missed it. That's it. No point buying it now. I don't need to watch this one. It's gone up too much. It's just not how markets work. Could I buy? I could. It's at 150. Geez, it's a long way, but I could do it. I don't know if I'm personally. I'll go and do it because I want to find something that's a bit closer to the light green zone. But I can't. If you said, "Hey, Carl, I'm going to go run out and buy some of this tonight," I'm not going to tell you not to. That's probably the best way to put it. I'd say, yeah, sure, absolutely. That's that. I go so far as to say I think that's a good idea. Let us go to. I've done that one. Done that one. I think I've done them all. Great. Oh, Paul saying JBSS was a great call last month. I do get them right occasionally, Paul, every now and then. Okay. Good one. I'm glad. I hope you got it. Yeah, there's no point having a great call if people aren't making money on them. He said I called it on 21st of April. Okay. Excellent. Well, that is it. I don't think, Nick, if you've got anything up your sleeve, let me know. But otherwise, we're at the end of the list. We're coming up to time. I'm going to be on Ausbiz in 10 minutes, so that gives me a little bit of time to prep for that one. So I can do maybe one more. General Electrics. Paul's just stuck in, so this will be the last one. General Electric, great one to look at anyway, because one of the biggest companies in the world, and it is going to hide from me for a little bit because just the way the AMI broker alphabetization works, it's not that friendly. Well, I know we've said to buy this one in the past, and I think you can stick with it. $100 is showing a little bit of supply, but I don't think so much supply that we need to be concerned. And I just think you're a happy hold here. I don't think you need to stress out too much. Last night candle wasn't ideal, but hey, it wasn't a great market. We did close above those lows. I would start to get concerned if it starts to close beneath this level here. I think that's an important level. I wouldn't be exiting my entire position if that was to occur. I'd progressively step out of this. I'd just give it a little bit of room because trends are spongy. And you don't want to just jump at the smallest shadows, but. -1 third if on a close, not a tickle, but a close beneath that, and then -1 third on a close beneath that, notwithstanding any other price action that might get you an exit earlier. For example, lower peaks, lower points of demand. So, something like that with some really black candles, but still, you're probably still waiting for a move beneath there anyway, but a happy holder in the meantime. Okay, let us head back here and say that we do run other sessions, and you should be coming to all of them, certainly an ASX edition on Tuesdays and the macro, so important on Thursdays. Head to www.thinkmarkets.com/au/webinars to register for those. If you're not a client of ThinkMarkets, well, you really should be, because we are the good guys in the Australian broking scene. And I do have overseas guests that attend these Friday sessions, and I'm sure we've got an office somewhere near you, because we do have offices almost quite literally all over the globe, certainly in each of the continents, apart from Antarctica, smarty pantsers. But we do have, obviously Aussie shares you can trade here, but we'll have the shares in your local jurisdiction as well. But the beauty of what we do is you can trade your good old-fashioned shares, but then you can trade your CFDs as well. And that gives you access now to foreign exchange, indices, commodities, crypto, and you can trade shares commission-free in those CFDs as well. And if you don't know what CFDs are, you really should get to know them, because they can give you much better access to your own capital. Is probably one way to put it. We probably should just do a session on those at some stage. Anyway, we're an award-winning broker. We've been around for a long time, and we've won a lot of awards, and we've regulated all over the place. So you can count on us, and you can count on us to give you great platforms, great customer service as well. Head to thinkmarkets.com/au for details. If you're watching on any of the streaming services, please hit the subscribe button to stay notified of any of my future updates, or hit the thumbs up button and let me know you like what I'm doing, so I continue to do more of it. It's been a pleasure chatting with you today. All the best until we catch up again. Bye-bye for now. But before you run away, don't forget that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, you should consider it carefully or seek the help of a financial professional. You can learn everything you need to know about ThinkMarkets and our products by heading to our website and downloading our product disclosure statement, our PDS.